Welcome back to the Bruegel annual meetings. I'm Ferdinando Giugliano from Bloomberg View, and I have the pleasure to chair this panel on Eurozone governance. Now, obviously, that's a topic which has been with us for some time. I would say that over the last 5 years, there have been essentially three phases. One where we did do changes to Eurozone governance without really thinking too much about it because we were in a hurry of a crisis. Then we've moved to a phase where everyone knew there had to be new changes, but no one wanted to do them because the politics were not aligned. That's what we were told. And now there is a phase where everyone is excited again about talking about Eurozone governance. Now, whether people are as excited about implementing these changes, we don't know yet, but certainly the French presidential elections have reinvigorated this debate, and everyone is waiting for the German election to see how much far this can go. So we have a really great panel to discuss this today. On the left, the host, can I say, of this meeting, Guntram Wolff, who's the director here at Bruegel. Then Agnès Bénassy Quéré, who's a professor at the Paris School of Economics and the chair of the French Council of Economic Analysis. Then on my right, Reza Moghadam, who's vice chairman for sovereigns at Morgan Stanley, but also used to head the European department at the IMF at the height of the Eurozone crisis. So he clearly knows the topic of what, Eurozone governance or non-governance pretty well. And then Johan van Overtveldt, who's the finance minister for Belgium, on my right. So what I thought I would start with is to ask the academics on the panel to say what Eurozone governance should look like, and then people who are in policy or have been in policy to tell us what Eurozone governance can look like. And then we'll take it further by looking at more precise issues such as things on the fiscal front, banking union, perhaps capital market union, and take it from there. We'll try to wrap this up by 3:15 so that there will be time for questions. If we go a little longer, please excuse us, but we'll make sure there is time for questions. So one thing I'll ask the speakers is to keep your initial thoughts brief and concise so that we can cover lots of ground and keep this as fresh and dynamic as possible. So, Guntram, what should the Eurozone governance look like?
Well, thank you very much for the question, and it's sort of putting us in a difficult seat, right? Sort of saying how it should look like, given how we followed all these discussions over the last years. But it seems to me that the two topics that I would really perhaps put an emphasis on is the first one is trust and convergence. Perhaps those two things are linked. You can think of a lot of things you want to do in a monetary union once everybody trusts everybody. And you can think of a lot of things that you don't want to do with each other if you don't trust each other. So I think the first issue is trust, and that's why currently, of course, the debate is picking up again, because we have we have had an election in France, and we sort of seem to see some more political convergence, at least on the surface of it. But I think it goes beyond the sort of the surface. It goes to the deeper questions, and I think on the deeper question, there's certainly still a lot of doubt, a lot of suspicions from each side to each side. I mean, this is very clear, and it's very deeply ingrained, and it's related to good governance, to economic structures, to different traditions, to also, frankly speaking, different views of what fiscal policy should do, what monetary policy should do, very different traditions of thought. So perhaps that's my first point, and I think what we've been seeing in the last few years, we've been seeing at least a gradual understanding of each other's positions. So let me put it this way. Now then, on the substance side, I think, of course, the key issue that we have to discuss and that we are discussing is the issue of fiscal policy slash debt management. And there, my view is that we need to decide what kind of model we want. So there's one model which is the federal model. So that would be the United States of Europe, which I think many academics like to advocate. So that would be a clear functional separation. You would have a federal level that is responsible for a certain set of functions. So it's responsible for macroeconomic stabilization in the area as a whole. It's responsible for the bulk of the debt issuance. It's responsible for being the counterpart to the single monetary authority. It is responsible for significant parts of government spending, and it has direct taxation power. And then you have the sub-federal level, so the states basically, and those states have their specific responsibilities, but essentially run on a balanced budget constraint. And if they don't respect that balanced budget constraint, they essentially hit the wall at the limit with being priced out of the market. So I think that's one option that certainly many academics like to propose, and it's a in itself coherent setup of a monetary union, right, where you have a strong federal level and you have the states that do, according to the subsidiarity principle, the things that they can do best, but they cannot really borrow, because if they start borrowing, there would be a risk that they would free ride on the common monetary policy. Now, the tricky thing here is that nobody really wants this in the monetary union. Nobody wants this. Why don't we want this? Well, first of all, we don't want it because we don't want to transfer any spending items, significant spending items, to the federal level. We don't want to transfer sovereignty to the federal level. We don't want to transfer taxation to the federal level. So basically that option is not there. And so I think what we've been discussing for quite some time now is there something that is more than Maastricht, which basically just says everybody is responsible for himself and fiscal rules limit the ability of governments to borrow. But at the end of the day, if fiscal rules are not respected, there's really nothing you can do. And I think that's an unsustainable situation, because it creates lots of moral hazard, and it creates lots of distortions, and this very much federal level. And I think sort of in between the space is the space that we are looking at. Perhaps a gradual, financial stability, increasing financial stability through banking union, centralization of financial policies, basically, to allow for more autonomy on the national fiscal side, with in extremis, the possibility for a default, so that actually you can limit and control the moral hazard. Now, if you cannot do this, I think we will continue to have this unclarity that we currently have on public debt. Is it a purely national responsibility? And if so, how do we take control of the moral hazard issue? So that's the way I would perhaps start.
Okay. Let me stop you there. And so, same question: what would you like to see the Eurozone do not to have a new Eurozone debt crisis?
Thank you, and thank you for the invitation. It's always a pleasure to be here with Bruegel and have these discussions. So I will constrain myself within the borders set up by Guntram, so not going to the federal solution. And basically I have 2 points. The first one is that the doctrine of the euro area is not sustainable. It still needs to be adapted. And the second point is that there is a need to streamline coordination to make it effective. So the first point is that in my view, the doctrine of the euro area was broken with the crisis. What was this doctrine? There were 2 points. The first was a triple ban: no bailout, no monetization, no debt restructuring. and the Stability and Growth Pact was supposed to do the trick, and it failed. And the second pillar of this doctrine was a macroeconomic policy assignment, with the ECB having to react to asymmetric shocks and national governments to idiosyncratic shocks. And this also broke with the crisis, where the ECB was unable alone to counteract, especially in 2012 and 13. So we have discovered that the triple ban, in fact, is a trilemma. And we have tried to push the walls a little bit to do a little bit of monetization, a little bit of bailout, a little bit of restructuring, but without changing the doctrine. And also, in terms of policy assignment, there is a rediscovery of the so-called policy mix, which had disappeared from the textbooks, and rediscovery of the spillovers in terms of fiscal policy, microprudential policy, tax policy, unit labor costs, etc. So we need first to solve the trilemma. One solution is to, in a sense, normalize the euro area with respect to other monetary unions in the world, which means less national debts, more federal debts. And that will make debt restructuring at national level credible and provide a monetary backstop like in other advanced economies. So the one possibility, possible model is to move towards these models that do work. The other thing that needs to be fixed is coordination. We know the failed attempts of the Commission to promote a euro area fiscal stance, and the Euro semester is not very successful either. So in my view, to make coordination, we need to streamline it, to limit coordination into areas where it is vital. And so it means that first, fiscal coordination needs to be only in exceptional times, where there are substantial spillovers, where there is a need to contribute to aggregate stabilization. So it's only in specific periods. And because it is very difficult, because in a sense, nobody thinks that it will ever work, this is why maybe some form of integration is necessary. So integration is a form of substitute for failed coordination. And I think this is the way that the euro area budget or fund or whatever needs to be thought about. There is an air of déjà vu. We had monetary coordination with the European monetary system. It failed with big crisis, and we moved to monetary integration. And in a sense, it's, again, the same thing. We have a system of fiscal policies, fiscal coordination, and it failed. So the question is whether we need a layer of fiscal integration. Now, to finish on non-fiscal policies, we have the macroeconomic imbalance procedure. To make it efficient, to give it teeth, it needs to be streamlined, and it needs to be refocused on the survival kit of the monetary union. So it means external imbalances, price divergence, credit bubbles, but not innovation, education, gender balance. And gender balance, I'm in favor of gender balance, but I don't see really the impact on the sustainability of the monetary union. And and also the macroeconomic imbalance procedure needs to focus, to take a euro area viewpoint. So it's a top-down, it should be a top-down in terms to focus on spillovers, areas where there are spillovers, and also on the sustainability of the euro area as a whole. So to insist on the consistency. So if you give me some time later on, I can elaborate on that and show how the last vintage, for instance, of the MIP is not fully consistent if you consider, for instance, the German-French imbalance.
We'll return to that. Now, I just want to go to the Minister and ask him to give us his perspective, because, I mean, from where you are, now obviously over the last 6-7 months, we've become a little bit more excited about the future of, we read statements by President Macron, we listen to Angela Merkel in debates, and we think that when October comes, the engine of reform will be started, and within not too long, we'll see a different Eurozone from the one we've been seeing so far. So I'm just asking you to give us your assessment from the kind of engine room of whether you see this engine starting anytime soon, or maybe we should be a little bit more cautious with our expectations.
Thank you. I think somebody over the ocean not so long ago said, never let a good crisis go to waste. And when I entered into the Eurogroup as the new Minister of Finance of Belgium, almost exactly to the day 3 years ago, there was still very much an atmosphere of, we've been in a terrible storm. There's some remainders of that storm, more to the south of Europe. And we have to make sure that that kind of stuff won't happen again in the future. That was, I remember very vividly, in the autumn of 2014, 15, the spirit. And we had long discussions. In Belgian politics, we often go into the night, but in the Eurogroup, we also sometimes go into the night on what to do. And these were very interesting discussions, always leading to the, or starting from the point of view, this Eurozone should become an engine of progress, of wealth creation, whereas at that point in time, there was a feeling that it was something that needed so much care that you could no longer consider it really to be an engine of progress. And so when you start thinking about being an engine of progress, you come up with things like the growth potential of the economy. You come up with things like being competitive, with being shock resilient, and all that kind of things. First remark, of course, always and everywhere, a lot of these issues have to do with national issues. I mean, if the Belgian labor market doesn't function well, we need to take measures in Belgium. And of course, we can learn from examples in other countries. But it's first of all, not only, first of all, something we have to tackle at the level where the problem is at hand. Secondly, of course, the Eurozone itself can contribute to those final objectives of what you want to achieve, amongst others, with a monetary union. Because I've always seen a monetary union as a means to, not as something maybe politically, but economically, socially, not as an objective an sich. And then, obviously, you see the institutional shortcomings of what has been originated, and everybody who knows the history of the euro knows these historical circumstances, the political circumstances under which the euro and the euro monetary, economic and monetary union was born. And so we have an unfinished monetary union. I think the banking union, as it has been put in place now, is a major step. If somebody had told me 5 or 7 years ago, you will by 2017 be in that state of banking union within the monetary union, I would not have believed it. But it has been done. It's not yet complete. There are still a few important issues or blank spots to be filled in, but it has been a major step. Now the question is, are we going to take other steps? And that's of course a political question, because whether you look at it from the perspective, more powers to Europe, I simplify now, or optimization of the rules that are presently operational, or should be operational, it's always and everywhere a question, are the member states prepared to delegate power, between brackets, to the European level, or not? That's the basic question, and that's the question, whatever of the underlying issues you debate or you discuss, a lot of technical stuff can be brought into the discussion, but the final question is always, is everybody around the table here prepared to accept a delegation of power in one way or the other to A or D European level? And I'm not surprising anybody in the room, at least not here in front, I think, when I say that for these kinds of steps to take now, it's a difficult period in time. Maybe it has to do with what I said as an opening statement, that never let a good crisis go to waste. We all have the feeling, some more than others, that things are going quite well. The Eurozone growth is up, employment creation is impressive, unemployment almost per definition is going down. The state of public finances in most of the countries is improving, maybe not as quickly as, for example, in Belgium, as we should wish for, but anyway, improving. And so the sense of urgency is not really there. And that when the heat is of the pressure, when the pressure is of the whole thing, it's much more difficult to reach specific results. So what I personally feel that is the best that we can achieve in these circumstances is that we should indeed aim for clarification of the present rules, clarification, simplification, transparency, and looking for ways in the present context to make the control and the follow-up of, let's say, the rules of the game, to make it more coherent and to make it more strict. Go further than that in this time period, I think would be politically not really wise, because there is so much discussion on all things related to Europe that you should be very careful not to start something that at the end might have a kind of boomerang effect on what your initial objective is. And so I would be very careful to start talking about treaty changes and all that kind of stuff. I think we should, I'm not excluding it, far from it, but we should be very careful how to deal with that at the present time.
Okay, so that was quite a, you could say some cold water poured onto the initial enthusiasm. But I was going to ask Reza, I mean, you've seen Europe take some major steps, which were, as the minister rightly said, unprecedented. But that was a time of crisis. That was when the house was burning and the firemen had to be called in. Now, can you see other changes being taken when things are looking good, or do you share the minister's assessment that maybe it's better to kind of concentrate on what we have, make it more efficient rather than make a great leap forward?
First of all, thank you for having me here. I think I am squeezed between the ideal and the reality, but I think I see a little bit of light between the two, and I want to see if it is possible to have some initiatives in this very narrow space. So I'll come to a couple of things which I think can be done. But let me just take one step back. First of all, I think it is very positive that Europe is having this discussion on governance. I think it's encouraging that despite the lack of urgency that the minister explained and the reality of a growing Europe and a more confident Europe on the global stage, I think it's a positive move that this issue will be discussed at the next Council. It is also very encouraging that Bruegel, as usual, has produced a fantastic set of papers by the authors here. I see Andre in the front row. I think that they're an excellent set of papers which do not just say what the ideal is, but what are the practical steps that can be taken. So I think those are two positive things. Now, and it is also correct, your point, that Europe has made progress on the broad governance architecture. I think to mention two important things, I remember, like the minister, attending the Eurogroup meetings in 2012, when the idea of the banking union was first mentioned, and within a year it became reality. So that was a very major step. Before that, I would say, in terms of crisis prevention and management, the setting up of a firewall in terms of EFSF and then ESM was another major step in terms of dealing with crisis. Now, two major things. Can other things be done? And let me propose two things that I think there is an opportunity to make progress on at the moment. One, not simply the idea of a European finance minister, but what definition of what that would be and the responsibilities would be. And the second, in part prompted by the impact of Brexit, would be the capital markets union. I think those are two areas where I think it is possible to make progress. Now, let me describe some modest baby steps on both of those that can be taken probably within the reality of current political framework. I think there is a lot of talk about multi-speed Europe, two-speed Europe, and so on. But the reality is that the Eurozone has to have a single speed by itself. And given the fact that you have monetary union, that monetary union has to be supported by, Agnès mentioned, steps in terms of cooperation at least, knowing that it's a bridge too far to move into federalism. Now, even in a completely federal state, if you look at the United States, Brazil, India, etc., it is not that the central government completely gives autonomy to the regions. There are strong controls in place, or even in the steps that Europe has taken. For example, at the outset of managing the Spanish crisis, part of that management was entirely to do with managing the budgets of the regions as part of the management of the overall. So I think there are always controls in terms of the sub-federal level. And so I think you need a system where you have the controls and you have potential support provided together. So what can be done? We just describe a very simple idea where you would have, again, an opportunity arises because the head of the Eurogroup coming to the end of its term, so the decision has to be made. That's an opportunity to make progress on this issue. So I would say a finance minister for the Eurozone, not the EU, a finance minister which thinks of Eurozone, not a single country, a mechanism to support the finance minister that helps to manage big shocks, not small shocks, not big recessions, not small recessions. So like what we have had, trying to prevent that in the future, and to prevent crisis, have supporting mechanisms to have crisis prevention before imbalances, control of imbalances, before imbalances get out of hand. So I would give a mandate to a fairly limited mandate and a limited fund, which can be built over time, for Eurozone finance minister to have first powers to spend, not lend, to budgets when they are under pressure during a big crisis. So that is the sort of incentive structure. Against that, there are a set of, Agnès mentioned already, there are various powers in place that the Commission can now use, the European Eurozone finance minister can use that, but you can have additional sanctions. For example, if your budget deficit is not in line with what it should be, you will be sanctioned and you cannot use the fund when the time comes. Or if you're, on the other side, if your current account surplus is too large, you have to make a bigger contribution to the fund so that the fund is built up more quickly.
I can see that going down so well in Germany, this idea.
But you have to have these symmetries on both sides. Let me just come quickly to the capital markets.
Shall we return to that? Because I think there is already a lot on the plate. So, but we will return to capital markets union because it's important. Now, let me ask the two of you what you make of this idea. Because I really liked your introduction where you said the European finance minister is a big difference between the idea and the definition. We all love the idea, but I think we have very different definitions in mind. So, I mean, the job description which has just been made, is that something which you think is useful, feasible? I don't know.
I mean, so again, we all can agree on a euro area finance minister, but not on his job description. I think that captures it fairly well. Now, Reza gives one job description, which is basically that of a budget czar who goes out there and tells member states, "Oh, you misbehave, you should run a different deficit." So that's sort of the stick, and the quid pro quo, the carrot, is a bit of funds to give it to a country. Now, having been here in the Brussels bubble for a few years, I mean, we've been to the Tsar side already, so there's basically, if you remember, there's been a number of reforms of the Stability and Growth Pact. We've tried this at the federal level, so at the European level. We've had a change in philosophy when the ESM was created, when there was, in parallel, a decision on a fiscal compact that actually was put into national constitutions with the hope that by putting it in the national constitutions, it would actually become constraining. Well, we can come to an assessment of that, but I think you will probably agree with me that not every country has fully implemented what has been agreed there. And so you know, it's just conceptually already quite difficult to think about what could this Tsar really be, and what kind of powers would he really, how could he have these powers? Because at the end of the day, if a national parliament says, well, I'm still boring, what do you do? I mean, what do you do? So that's on the Tsar side, and then there's the question on the fund side. I mean, how much do I need to make a real difference? I mean, I think that's the question, right? So we now have the ESM, which is, as you rightly say, Reza, it's a loan which allows to reduce austerity, right? So without the loan, you would have to do much more significant fiscal cuts. So you have this ESM. But can we have something that, instead of giving a loan, comes in perhaps a little bit earlier and helps? And I think, yes, we can have that. So we can think of a European unemployment reinsurance, for example, that in case of a big shock would provide some funds to a country, and that would help pushing that country to the brink, right? Avoiding that this country is being pushed to the brink. And so I think on that side I would be rather positive. But I think what you would need is the proper quid pro quo, and you know, I think we have to do some thinking on what could be the proper quid pro quo in terms of, as you say, outside control. I just don't believe that we will manage it through administrative processes. I think perhaps the road is rather through capital markets playing a bigger role in the control.
I like the idea of the finance minister in charge of big shocks, not small shocks. You have to define what is a big shock. But you avoided to talk about the parliament that controls the finance minister, and this is where we written together on these issues. And the problem with the parliament is that it takes time before there is a decision, and then it takes time before there is an implementation. Therefore, the idea of a form of unemployment reinsurance, it has the big advantage of being automatic or quasi-automatic, and being concentrated on big shocks, temporary, targeted to the people who have a high propensity to consume, so very stabilizing, and not costly. When we look at the US, it's not costly. So I think for this reason, but of course you cannot promote the idea of kind of unemployment union. It's not very, it will not fly very well. In my view, this kind of project needs to be embedded in a wider project of a job union, where you have a national pillar with structural reforms and kind of convergence, not harmonization, but kind of convergence of the structures. A European pillar with investment in capital, in human capital, with mobility enhancement and things like that. And then you have the insurance, which comes together with the other ones, not alone. And so, in my view, the discussion on the finance minister is problematic, because you put the institution before the project. What is the project? And then when we have the project, what kind of institutions we need? And in that way, maybe I could react to something you said about the unwillingness of the population to move forward. I don't think that the population, the public opinion is exogenous. It depends very much first on what is the project, and we must admit that in recent years we have not provided projects that really talk to the people. Capital market union, banking union are not things that people can understand very well. And at the same time, we've seen in France that a single leader can change the opinion very much, very quickly. So I don't think we should take the public opinion as given.
Yes, and I think that's a very good challenge, in a way, to you, Minister, and you ministers in general. Are you doing enough to lead towards a new Eurozone governance, or you're being a little bit too cautious? And by you, obviously you personally, but also you and your colleagues.
Of course we can and we should try to influence public opinion. We can do that to some extent. And the question in many cases is over what time period you can keep that intact, the kind of influence you want to have on public opinion, because obviously the public has others and more other sources of information than just what the government is telling them. And so I think one of the things we really need to do at the national level is to stop blaming Europe for all things that go wrong. In my country, we've seen for years and years that we needed to increase taxes or reduce spending because Europe wants it, Europe imposes it. That's of course the wrong kind of rhetoric. You have to do that because you need to do that as a country, as a kind of taking well care of the situation now and for the future. So I think Europe has been blamed for a lot of things for which Europe was not to blame at all. And that's something we should stop doing on the political side. And sorry, I repeat my argument, and I agree with you that you should not put the institution before what the institution should do. But what it is that you should agree upon is what the powers will be of that institution. And whether you are prepared to delegate to that institution, whether it's the Minister of Finance or some other institution, whether you are prepared to delegate what is today a national prerogative to that entity. And of course, the elections in France were a major change with respect to the general feeling about Europe. But there are a lot of countries where the sentiment remains somewhat different in terms of how do you want to go further with that European project. By the way, I think the German elections will not make that much of a difference. I don't really see the German opinion or the German position change on major issues like Eurobonds and other things. I think it's more a German position than, well, a kind of position of a certain kind of coalition in Germany. So that's, of course, they are important, but I think they are not that important for the future of Europe. What I want to briefly comment on is something Wolfram said. I really do believe that indeed, within the context that we have before us today, we can improve a lot on the way in which we go about problem situations, and especially potential problem situations. Somewhat even more specific, the programs with which we approach or should approach countries that are becoming, how should I say, somewhat in heavy weather, or that start to get into situations that might become quite difficult. We should be more proactive. And there I think the ESM is an institution that in the present context already has a lot of what it needs to be able to do that. So if you want to translate that into a kind of European monetary fund, I don't have any objection to that. I think with some adjustment we can do that. We can make programs, the conception, the follow-up of the programs, the control of the programs, much more proactive, much more transparent, and hence at the end of the day also more efficient. And that's something that we can do at relatively short notice, and we should do that.
Reza, I'm going to ask you a question because you've mentioned the finance minister, you've mentioned the capital market union, but you haven't mentioned the completion of the banking union. Is that because you think what we have is good enough, or is that because you think that what we want to have is impossible to reach? And by that, obviously, I mean the deposit guarantee scheme, which is common across the Eurozone, and perhaps a swifter use of the resolution fund, or even an direct use of the ESM funds to recapitalize troubled banks. So these are three steps which many people have in mind. Do you think we are good where we are, or these steps are just impossible? I mean, what's your thinking about?
No, I didn't put it as part of my two proposals, in part because there has been considerable progress there, in part because what is left to do is very well understood, in part because some of it, for example, the backup fund is in train, but it will take a long time to get into place. So I think the issues are well known. If there is political momentum to discuss and make progress on governance front, I think given the discussion that is taking place on the European Monetary Fund or a European Finance Minister, I think this is an opportunity to make progress in areas which have not been addressed. And what has not been addressed? The way fiscal policy is designed, particularly in the Eurozone, but in the EU as a whole, especially important in the Eurozone, is that it tends to be very pro-cyclical. Now, some of those other initiatives help, but a European Monetary Fund or the ESM does not help with that. It helps you with funding when there is a capital market crisis. You need to address the pro-cyclicality because it leads to higher unemployment than it needs to be. It leads to questioning the sustainability of the zone. And so both the Minister and Agnès mentioned it's the issue of where you want to get to. And I think there is an opportunity to address those problems, whether you call it Eurofinance Minister or something else. I think those are the remaining problems. I see two problems which are helped by things like banking union, but not addressed. One is this pro-cyclicality. And the other is, while there's been a lot of talk about it, how you address imbalances before they become too big and undermine the viability of the union, there is no mechanism to address that. There is talk of it, but there is no teeth in the mechanisms that currently exist. So banking union certainly helps, important, and the final leg needs to be put in place, but it's quite well accepted. It's just the final political will needed to get.
I'm going to ask the Minister, is it as well accepted as Reza is making it? I mean, we've all, we know that the deposit guarantee scheme will, we think it will happen, but it's not happening, and it may not happen for some time. I mean, am I being too pessimistic, or?
I think we need to tackle it certainly within the shortest periods of time, but whether we can succeed in bringing something substantial about remains to be seen. But obviously, the banking union is incomplete without the deposit insurance scheme. And with respect to the capital market union, where there are of course, a lot of more loose ends lying around of what needs to be done and how you should go about that, I think there also everybody agrees that it would be, to put it euphemistically, a very good idea to have that within the monetary union. But the question always is, how do you go about, and the objectives that you have in general terms, the road to Rome usually runs along different ways.
Yes, but my question is, some of your colleagues think there has to be some sort of exchange between a deposit guarantee scheme and limits on sovereign exposure of banks. That's the kind of, is that something which, and obviously some countries, you mentioned Rome, and that may be a hint, are less keen on sovereign exposure of, on the balance sheet of banks, on limits on sovereign exposure. Now, do you think that we need to have that exchange? Because if we need to have that exchange, we may wait for we may have this debate in 10 years' time and still not be resolved, or not.
Well, the principle that we all agree upon is that you should, integration and solidarity should go hand in hand. But literally hand in hand and moving at exactly the same pace is very difficult. And I think it's fair to say, I understand the thoughts many have on if you go too quickly in terms of solidarity, you might create huge problems in terms of moral hazard and all the related issues. But if you don't move, well, by definition you don't move and nothing happens. So that's a very tricky, politically very loaded situation on which part of the two, integration, solidarity, you move first. It's unresolved, that's for sure. And I personally think that we should be careful not to move too quickly, because the tendency, of course, in some countries is to go fast in terms of integration. But how do you integrate solidarity in that story without creating enormous problems of moral hazard? Whether you like it or not, they are there. It's not by wishing them away that they go away. So it's tricky, it's very tricky.
Mr. Minister, can I ask you a question? Suppose that a big bank that is supervised by the SSM, suppose that the SSM makes a big mistake. They are very good, but suppose that they make a big mistake and the bank is bankrupt. Do you think that only national deposit insurance should be asked for?
Well, well, of course, it's called into action when you have a bank problem or a huge bank explosion today. So it is called into question or into action. And of course, when you have a kind of perfect banking union at the end of the day, you would have a pan-European, which means, if you ask me a question frankly, I'll answer your question frankly, that if at that point in time for a specific bank in a specific country, you have the big bank and you have a pan-European deposit insurance, well, then everybody has to put up his part of the money. I find it very defensible that you make sure that in advance, everybody did what was possible to make the kind of big bang of a bank impossible. And I don't hesitate to say that there is still a lot of work to do in that respect. So I fully understand the reluctance of certain countries to jump into the pan-European banking deposit at this point in time.
Guntram, yes, you're going to say something, but I also want to comment on how good the governance of the failing banks, of handling a bank failure has been. Because we saw, I mean, there was a case like in June over some Italian banks where I didn't see a fantastic amount of coordination between the various authorities, or maybe each authority was actually just looking at a very narrow bit, and the solution, as far as I'm concerned, was not fully satisfactory. So I'm just wondering, since we're talking about governance, how good is the governance of what we have in terms of bank failures now, or whether it can be improved, how it can be improved?
Well, I guess I would agree with your analysis that the governance is quite imperfect, and it's quite imperfect in the sense that we have created this single supervisor, then we have all kinds of institutions meddling around with sort of the resolution part, and then we have the national deposit insurance part, and so this creates all kinds of coordination problems that make it very difficult and that in some cases lead to an outcome that is not desired. Now, we have had also successful cases, so I think the successful one was probably the Spanish bank,
Banco Popular.
Popular and not Popular, that was, to my mind, relatively smoothly resolved. Now, these things are never smooth, but okay, to the extent that they could be smooth, it seems to me it was rather smooth. While in the Italian case, I think there were a lot of sort of different actors involved, and there was, frankly speaking, there would have been also, if the rules had been applied very strictly, it would have gone into senior bondholders, and that would have been much more controversial, much more painful, and you can have different views whether the transition period was appropriate so that balance sheet could have adjusted appropriately and so on. But sort of in a steady state, I would love to see the banks to have a balance sheet that is actually capable of handling BRRD, which means basically it's a job for the banks to a large extent, right? So you have to hold enough equity and junior bonds so that you can actually suffer the bail-in that BRRD is requiring. So that's the whole MREL discussion. I think we will have to go in this direction, and that's a gradual process. So yes, the governance is imperfect, and ultimately I think I'm like the minister. I would like to see basically one single European deposit insurance that is at the same time basically the resolution authority, so some FDIC kind of organization that would, you know, take charge and resolve the bank and be responsible for it. Perhaps I wanted to comment a bit on the fiscal still, because now let's not move only on the banking that already, where we have already made a lot of progress, but on the fiscal, let me just sort of add one thought and then one institutional point. So the one thought is, of course, that the largest part of fiscal stabilization policy is and will remain national. And I think we need to acknowledge that, and we need to understand that spending and taxation remains national, and that's not going to change. And so I think the key question is, can we ensure that countries under almost all circumstances retain market access and can exercise their stabilization function? And can we draw the line such that we can still prevent that you know, they run irresponsible policies and then, you know, basically force monetization or something of that sort? I think that's the fine line that we have to walk. And the Eurozone budget, what the Eurozone budget could do is it could provide some sort of an insurance for the very big shocks, helping the country to avoid being pushed to the brink. And that's where I think the new Eurozone or EU budget could play a role. And perhaps my last point, if you allow me, would be thinking about the institutional setup of that. And I think someone mentioned it should be a Eurozone budget and not an EU budget. Well, if you take an institutional view, European institutional view, you would say, well, now the Brits are gone, so let's basically do it with the EU budget, right? Because 85% of the spending of the GDP is Eurozone of the remainder of the EU, and for the EU budget, we already have some sort of an institutional structure. The European Parliament is involved, has to approve things. So we have already some federal democratic legitimacy processes, while at the Eurozone level, we basically have at this stage an ESM and a Eurogroup and national parliamentary accountability. And so I think an important question also when you think about powers and, you know, where do you transfer the powers, an important question is, do you want to do this at the EU level, involving the European EU processes with all their benefits and shortcomings? Let's face it, the European budget process is not really a very elegant process. Or do you want to create a totally new thing, and then what kind of legitimacy do you want to give this new thing eventually? Because so far the logic remains national parliaments, and that makes it difficult for handling bigger things, because national parliaments have to defend national interests and not European interests.
So I owe you your thoughts on capital markets union, and your second point, why.
Actually, maybe I take the cue from the question you raised about the banking system and consistency of the application, and I come to the banking system. I think there is a very valid point you make in terms of the consistency of the application of the new rules across countries, but it's also the case that since SSM came into being, we have seen greater action in dealing with the problems, particularly in the problem banks in the Eurozone. Probably the issue that remains, and this is relevant for the capital markets, is the business model of banks and the profitability. And while many still have impaired balance sheets and very large NPLs, a question is there about the profitability of the banks and whether the valuation of the collateral, valuation of the bad assets is in line with markets. And when you look at the asset disposals that some banks have made, this question becomes very, very important in terms of the ability of the banks to make money over the business cycle. Now, where does capital markets comes into it? When there has been successful disposal of NPLs into the market, it has been done through capital markets recently. And I think that's an important blueprint. And there are two things which are relevant to capital markets here. One is London will not be part of the European capital markets very soon, and therefore one needs to think what are the implications of that, and it is good that one hears that the Commission repeatedly says that the urgency of capital markets union has increased, but at the same time some of the measures which are taken, for example, the law on securitization that is going through the European Parliament, they actually make some of these actions more difficult. For example, they make securitization, while possible, more difficult, and therefore if one wants to help the banking system to come back to health, you need to have supportive measures, for example, have a sensible securitization law. Also, you need to think about what the implications are for London not being the European capital markets for the Eurozone. By definition, given the Brexit, banks need to set up units within the EU. Costly. This means you will have extra capital than you did. Therefore, the cost of business goes up. So that would be okay if the business opportunities also go up, and if you are easily able to conduct capital markets business within the EU or the Eurozone. And at the moment, while Europe has moved towards banking union, and you have the SSM, there is nothing equivalent on the capital market side. So I think my second proposal is that you need to essentially replicate the SSM model on the capital market side, and you need to do that fairly quickly in order to prepare for Brexit.
That would be strengthening ESMA?
It could be strengthening ESMA, but it does require unifying regulations and processes and capital market supervision through a single entity rather than at the moment where it's through individual countries. So I think, again, that's not just capital markets initiatives that are being prepared are important, but you need to go much further than Europe was planning to do before Brexit.
Minister, any comment?
I fully agree with that analysis, and there's of course an element that you didn't mention, but that I think is very important in this analysis, is that of course we have been stepping up capital requirements and all that kinds of thing with respect to the banks, but of course we see another issue arising, that's shadow banking, because a lot of the activities, or some of the activities, are taken over by the shadow banking system, which basically means the financial markets, some exponents of the financial market. And that's why I think that if you have a well-functioning banking union, you should also have a well-functioning capital market union, because the two will go together more and more. And there are a lot of ways in which what happens in one sector, if I may put it that way, influences what happens in the other. And if you have control of one and lack of control or insufficient control of the other, you may get very surprising and unpleasant things happening in the one you are not looking closely or too closely at.
A final point which I think we should touch on before moving to question is the other side to all of this, which is the democratic accountability of these institutions. So say we strengthen, create something new. We are at a time now, obviously the kind of Eurosceptic parties seem to be in retreat at the moment, but we've gone through years where there was a lot of discontent towards European institutions. So we've talked about the technocratic side. Now, what about the democratic side? How can we strengthen the democratic institutions so that these new structures we are imagining are not built on sand, but on something a little bit more solid?
Well, I mean, first of all, I think it's really an important topic, and that's why I already started mentioning this issue. Should it be through the EU budget or through a different euro area budget? Now, if it was through the EU budget, I think we have a fairly clear democratic accountability structure at this stage. Now, that may be not an optimal setup, and I'm certainly not a big fan of MFF negotiations, but they are being passed also by the European Parliament, and there is a clear treaty base for it. So it seems to me it's a very democratic process. I mean, perhaps not like a national parliament, but there is a democratic accountability here. Now, if you do it otherwise, I have to say, I mean, the first question is the current structure with the ESM totally undemocratic, as the European Commissioner for Pierre Moscovici has been saying recently? Well, I have my doubts. I mean, there is actually quite a bit of democratic accountability, but that democratic accountability happens at the national parliament level, and it happens in all national parliaments. And arguably, it is also the place where it should happen, because this is national taxpayers' money. So as long as a national taxpayer and a national parliament decides on the resources, the democratic accountability will be national, basically. Now, I think the really big question is, will we be able and will we agree on some form of a European unemployment insurance tax or whatever that would be a European one, and that would be legitimized and decided by a European/Eurozone parliament, and then the institution holding to account would be European or Eurozone institution. And I think if we were ready to do this, it would be a game changer, because it would transfer an actual competence, namely the competence to tax and the competence to be held account for your taxation and your action, to a different level. But as long as it's purely national tax resources, I think, I mean, we can always say, okay, there's another vote in the European Parliament, but at the end of the day, I mean, it's going to be the national parliaments.
I agree with what Guntram just said. The problem is that the European Parliament cannot commit for national budgets. So this is another reason why, in a sense, fiscal integration may be easier than coordination of national policies, because then you have a clear accountability. If it's your area budget, then maybe a chamber of the European Parliament can deal with it. Otherwise, some people have proposed introducing another layer with a mixture of national parliaments, but I'm not sure that given the lack of transparency we already have, where people don't really know who's deciding what, adding another layer would be the solution. I really doubt on that. So in the short term, what we can do is build on the ESM, although we know the ESM is an intergovernmental framework, but it could be improved in terms of governance with qualified majority rules, where a country could not block a decision, that there would be no veto at the ESM. So this could be an improvement and more transparency, which was really lacking during the Greek crisis.
I want to be brief on this one. I think I fully agree with what Guntram says. At this point in time, the control function or the democratic function is exercised by national parliament, which is, given the context, the only thing you can have, and I think works rather well. If you use the word game changer, if indeed there would be a big change in the ways in which we go about these issues, and we would be ready, sorry to repeat myself, to delegate important functions to the European level, then of course that's a different ballgame, and then the European Parliament would have to exercise its parliamentary function. And I would also be very hesitant to have a layer there in between. I think that would only complicate things and be a disservice to Europe.
I think you put your finger on a very important issue in terms of popular support for the European project. This is not an area I have any expertise in, so purely personal reflection. I think, unfortunately, at the moment, there is a distance between the national governments, the countries, and Brussels, perhaps with the exception of the Belgian government, which is based in Brussels. And that gap needs to be bridged. And I am doubtful if the solution is simply European Parliament, because European Parliament is also somewhat distant from the capitals. So I think it's a very important issue that needs to be addressed. To me, somehow, you need to have greater involvement of national parliaments in European decision-making so that they have ownership. That ownership is kind of lacking at the moment.
How do you organize that?
Good question. I mean, there have been various proposals. As I said, I have no expertise in this, but there are various elections where various proposals on the table where people have proposed the second house, which is perhaps too much. People have proposed joint committees of the national and the European Parliament. People have proposed reforms of the European Parliament. People have proposed holding the elections always at the same time so that you identify your European MP and your local MP together. But I think we need to acknowledge there is a problem here and that various ideas which I think do need to be considered.
Okay, I think this is an excellent point to stop. I'm going to take questions from the public. The minister may need to leave a little bit earlier than, so if he disappears, it's because he's got a country to help to run, so that's a pretty good excuse as far as I'm concerned. So I'll take that question first, and then the one there, and then the one at the back.
Okay, this is Jürgen Mattes from the Cologne Institute for Economic Research. 3 questions, brief ones. We heard from Emmanuel Macron that he thinks about having a core euro area, so some countries of the euro members to move forward as far as integration is concerned. Is this a viable idea? Does it make sense economically? Is it possible on a legal point of view? Second question, when we talk about a euro area budget within the EU budget, is this possible without treaty change? And third question, well, rules. It has been said rules don't work. Maybe they don't work as much as they should, but they work to some extent. When you look at Spain and Portugal, they reduced their fiscal deficits, but still they could do better. So one of the charming ideas with the 5 presidents' reports and also with the reflection paper to have this kind of convergence first and then kind of an ex-ante conditionality for some kind of fund, Reza, as you said, for large shocks. One of the ideas that are in the game and which are basically good ideas. So pre-qualification basically in order to make policies better. But what do we do if after the qualification policies turn worse? Like, will it be like with the euro area membership? Once you're in, you will remain in? Is it possible then to kick countries out again? Is this credible? Is this time consistent?
Yeah, my name is Klaus Marto from the European Central Bank. I would like to ask the Minister, you mentioned the European Monetary Fund, but you were not fully clear about which tasks you would assign to the fund, and there was an interesting debate also by Agnès talking about qualified majority voting and transparency. When I look at Reza, who was at the International Monetary Fund, this fund is fairly independent. The staff of this International Monetary Fund is fairly independent, has a lot of transparency requirements and relatively strict rules. Would you, if you go further in the direction of a European Monetary Fund, favor such a system like the IMF to have a very strong staff which is at arm's length, quite independent from the political level? In the case of the IMF, this is the executive board of the IMF. And how would that go hand in hand with giving to this monetary fund more tasks, like possibly some kind of a fiscal capacity, which is of a quite different nature than what the IMF is doing and what some people want the Europeans to take on their hand in the form of the European Monetary Fund? Thank you.
Okay, and a final question for this round.
Hi, my name is Stan Jordan. I work for an NGO called Posimony, so we work on monetary policy topics. I have two remarks. The first remark is regarding the whether this Eurozone Parliament is really a good idea. I would fully support it because, okay, it's true that the European Parliament right now is distant from most people, but it's also because the current EU Parliament is powerless, to be honest, on a whole range of specific issues. It's not powerful enough. Okay, it's maybe not completely powerless, but if we talk about important issues like social issues, inequality, and so on, people care about those issues, but the European Parliament is not really involved in the core of the decisions. So having a Eurozone Parliament would change this, and I would agree it would bridge back, and we don't need national parliaments. That's in support to the point about not having a middle level. Second point, I would like to challenge the assumption that all the sort of panels on governance start with the assumption that people are and will always be against transferring fiscal sovereignty. I think there's been a huge shift in opinion. If we talk about corporation tax, for example, I think there's a huge, or at least very much growing perception that we have lost sovereignty on that level already because of fiscal competition. So I think if we could start the debate from that side, perhaps, then we could challenge, we could start the debate with different assumptions, and then we could go a bit further in that discussion. Thanks.
Okay. Just one warning, because as Agnès said, we care about gender balance. The next question, actually the next set of questions will be from women, so because we have 3 men asking questions now. So women, be prepared for asking a question, because otherwise we will stay here. I'll take responses in this.
With respect to the question on the European Monetary Fund, I see it as a way forward within the present context, so that we won't have too much treaty issues, if I may summarize it briefly like that. The idea is that the kind of, and you made the comparison yourself with the International Monetary Fund, the kind of program development proactively, but also in terms of worse situations, but of course you should expect those worse situations to be much less around if you have good proactive policies, the design of the programs and the follow-up of the programs. I don't see immediately, but your question will inspire me to think about it, that European Monetary Fund develop all kinds of issues with respect to fiscal capacity. I think that is something that should be discussed at another level, but I see it especially at the level of programs, but defined in the broader sense of the world. And then I would like to make a brief comment on the issue or the question of whether it would make sense to advance with a core group within the monetary union, within the Eurozone. I think it's an idea that is worth reflecting upon. I would only warn for making things even more complicated than they are today, because then you would have a euro area, a core euro area group, then something like, I don't know, the left behinds, or those that have the opportunity to someday take the step up. I think it's complicated. It's worthwhile to contemplate, because it might give you ideas how you go further within the context that at that point in time is the most appropriate political context. In that sense, I think it might be a worthwhile exercise.
Just take 2 questions quickly. One about the issue of rules and pre-qualification. When I was at the IMF, we grappled with that a lot. At the end, we did come up with a precautionary financing facility, which was based on pre-qualification, but provided people applied to be qualified. And the solution there was they were qualified for a period of time, and then it lapsed. So there are ways of dealing with it. And then in the question in terms of parallels between IMF and EMF, I think it's somewhat easier at the IMF in terms of governance structure because it's worldwide. Therefore, power is more evenly distributed across the world. It is more tricky in Europe where you have a small, limited number of countries in the same region.
Thank you. So, core of your area, I agree with the minister that we need a single speed in the euro area. In fact, there are too many speeds in the EU, and perhaps the debate on Brexit is also shaped by the fact that the Europeans want to reduce the numbers of speed, not to increase the number of speeds. And, but this, nevertheless, you can have pilot projects within the EU area. If a few countries want to try other forms of integration, why not? And then after a while, you can extend it to the EU area. You need to keep in mind that the Schengen Agreement, if I'm right, started with an ad hoc agreement with a few countries and then became a European policy. Euro area budget without a treaty change. So it depends which treaty. It can be an ESM treaty change. You can think about a euro area budget as a kind of subsidiary of the ESM. Ex-ante conditionality, so I am in favor of kind of precautionary credit line because the problem we have with the ESM today, and it will be even more after 2018, that the countries will no longer want to ask the ESM anything because the programs are so strict, so difficult politically, that they will prefer not asking for the ESM, so that the risk that the ESM becomes useless. And the step between normal time and a program, a fully fledged program, is huge. So it could be useful to have an intermediate step where you have, for instance, if you comply with the pact, with the Stability and Growth Pact, you are entitled to get, if in case of a crisis, entitled to get short-term funding from the ESM for a while, and after, say, 1 year or 2 years, if the problem is not fixed, then automatically you move into a fully fledged program. So the more hazard doesn't come there because you know that if you don't fix the problem within a few months, then it means that it's not a liquidity problem, it's a solvency problem. So then you have to move to another program. So I think this could be feasible. So another way so I'm responding also to the idea of the rules and how to make the rules more credible. One way that has not been explored so much is to come back to this idea of blue bonds or red bonds by Depla and Weizsäcker, but not on the stock, on the flow. So marginally, so suppose that you don't comply with the pact or you don't comply with some form of coordination of fiscal policy, then at the margin you would have to issue junior bonds, which would be more costly, and so you think it twice. Yeah, it's not stability bonds. I think stability bonds are what? Yeah, right. Okay. Technical discussion.
Sorry. Okay, so I take the last questions then, I guess. So. Just on the issue, is it possible to have a euro area budget line within the EU budget? My understanding is, from what I hear here, but I'm not a lawyer, is yes, it is possible. So one could do it. But I mean, this is just sort of what I pick up in Brussels. I'm not a European constitutional lawyer. Totally agree on the core euro area needs to be the euro area. I mean, there's no subgroup. Otherwise, we create all kinds of problems. Then there were two questions. Well, one is the European Parliament powerless? That was, well, of course, we know that President Juncker calls it ridiculous, but I don't think it's powerless. It has quite a number of powers. But where I would agree is that, of course, in many of the issues where citizens think this really concerns them, taxation, social policies, it has no direct or very little direct powers, and that may contribute to the distance. But let's face it, Congress in Washington is very powerful, but it's still perceived to be very distant by people in all over the United States. So I don't think you solve that problem by giving it more power. I mean, people will, in a heterogeneous union with very different national traditions, if we centralize all these functions, I think there will be a lot of rejection because people will just say, wait a minute, I've always been having a social security system that was modeled in the spirit of Bismarck. Why do I have to cope now with this new European way of doing it? I don't think that will go down very well. So, which is why basically we don't want to centralize these kind of functions. Then you made the point on couldn't we sort of start the fiscal union through agreeing which tax we would actually like to centralize? And I think it's actually quite a nice idea because there are some taxes, and I think Agnès, you and I, we wrote at various occasions about this, where we do believe that actually a lot of people would support that. I mean, so support moving that really from the national or the regional level even to the European level.
Okay. Next questions? There has to be a lady in this room who wants to ask a question. Yes. Isabel.
Thank you very much. Isabel Mateo Silago from BlackRock. So obviously the panel is on Eurozone governance, so I'm sure everybody thinks it's important. But my question is, thinking about growth and social cohesion in Europe for the next 5 to 10 years, what is more important, the kind of things that you guys have all been talking about, or trade policy, single market deepening, real economy reforms?
Okay. More questions? Okay. Yes, the two men here. Yes, I know, but...
Thank you. I'm Leo from Transparency International, working on Eurozone governance for them. So basically on the democratic accountability there. Now there seemed to be agreement on the panel that actually fiscal policy is done at the national level, and therefore control should be at a national level as well. However, of course, we have the rules at the European level, and the rules are being, the Commission is looking for flexibility, but nonetheless the rules are being enforced via the Eurogroup. There was a lot of peer pressure exerted behind the closed doors of the Eurogroup. So there seems to be a bit of ambiguity of how much of the decision is effectively taken at the European level, and to what extent does, for example, the Portuguese finance minister still call the shots on the Portuguese budget. So it seems that informally we can integrate part of fiscal policy, but formalizing the democratic control is where the actual loss of sovereignty lies. And so democratic control seems to be lost along the way somehow.
Okay.
Thank you. I am from the Central Bank of Hungary. If I look at the European project, 3 big things have been achieved: single market, Euro, and Schengen. So these are huge things. Now we want to go further. We have to decide what do we really want to achieve. Crisis prevention, this is one thing, or do we want to have the whole euro area working a little bit better, innovation, unemployment, social benefits? They're 2 different things, 2 different things. On crisis prevention, we have done a lot. Banking union, the ESM, firewall, this is a big thing. We can strengthen that. But if we talk about further the long-term issues, these are entirely different things that when we are discussing, it seems to me that it's confused because people who want to have a common budget, what do they want? Crisis prevention, or they want to have a budget that they can strengthen innovation, they can improve social network, social net. So I feel that there is a confusion on that, and as long as there is a confusion of what we want to do, we will not find the right solution. This is particularly with the common minister of finance. As you said, Guntram, the job description is the most important thing. It's easy to agree on having the minister. It's much more difficult to say what the job description is. Or we want to have an EU budget. Why we want to be to manage crisis or to have a much bigger thing? And I don't want to enter into the details now that what is what. I just wanted to draw the attention that we will have to be clear in our mind, and the policymakers will have to be clear in mind whether this is crisis prevention or this is something different. Thank you very much.
Okay, so very, very good and very difficult questions. But perhaps to Isabel, and I mean, I think that links also to Georgi's question. So if we think that we are fragile and a crisis can happen any moment, and that crisis will leave a very important mark on our economies and our social fabric, then we should prioritize the crisis prevention mechanisms and building up the crisis prevention mechanisms. Now, if we believe that basically we're getting out of all of this, we have robust growth, we have a solid recovery that will be lasting, and we've done our job on the deleveraging, and we continue to actually run very prudent fiscal policies so that there will be no new fiscal crisis. We continue to have much better banking supervision so that there will be no banking crisis. So there won't be any crisis in the next 10 years. Well, if we think that, then perhaps I would indeed prioritize what you mentioned, trade, improving the digital economy and making sure that we can manage the impact of the digital economy, improving the single market, and so on. And so really it's a judgment call. How likely do we see and how fragile do we think is the current construction? And to my mind, we are still not totally out of the woods in terms of the construction. So I think we do need to discuss still the construction because there is still some fragility. Well, perhaps I let the others also answer.
So it's a very tricky question, the link between, because there is a link obviously between growth and avoiding crisis, because the assessment you can make on the debt sustainability depends on growth. So look at Italy, so the two are intertwined. But however, I would like to mention the case of Greece, because if you draw the ratio of GDP per capita in purchasing power parity in Greece relative to, say, the euro area average or Germany, over the long term. You have a long-term divergence that starts in the 70s, well, maybe before, but I don't have the data. And then you have the monetary union period, which is a bubble within a long-term divergence. And now we are back to the long-term trend. So it means that it's very nice because it shows that money impacts the medium term, but it doesn't impact the long-term trends. So in a sense, we can distinguish the two layers of policy. We have to tackle the medium-term issues, and this is why I insisted on the macro imbalance procedure that needs to deal with the risk in the short term and medium term, not the long term, which is another policy, which is Europe 2020 initiatives like that. On fiscal sovereignty, I agree with what you said. I think if we move in the direction of more responsibility of national member states vis-à-vis their creditors, then we have to move also towards a renationalization of fiscal rules, like in the US, where states self-imposed the rules. And so this is consistent. We have to keep this in mind. We cannot have both responsibility, individual responsibility and a rule that may be ill-designed, which would be the responsibility of the European level, that is imposed on national member states. So I think this is something that is feasible. This is something that is feasible not in the short term, but later on.
Maybe I take two of the questions in terms of other big issues. I think when I just think briefly, there are other major issues out there, like immigration and population growth on the edges of Europe, in the Middle East and Africa. Huge issue. Related to that, the foreign policy and geopolitical role of Europe again, a massive issue, the technological change and the impact of that on labor in Europe. These are big issues. In fact, they're so big, probably the governance issues are relatively easier to deal with. And probably it makes sense to deal with some of these governance issues because you don't want, when the problems arise, to be preoccupied with your own smaller issues without having the resources and focus on the bigger issues. One word also on transparency. I think there are good examples of transparency in Europe. I mean, for example, ECB, the fact that they publish everything, the minutes are published, the discussions are known, of course, after a period of time in order to make sure they are not market sensitive. So I think there are good examples that can be replicated by some of the more political bodies also.
Well, the question, what is most important, what we have been discussing about in the last hour and a half, or if I may summarize, the real economy, structural adjustments or structural reforms, I think they're two sides of the same coin. If you don't have the one, the other one will not help very much, and vice versa. And there's even a kind of additivity between the two of them, because if you do the structural reforms properly, it will certainly help everything on the European governance level, because your economies will become more flexible, you will have much more adaptability in your economy, and that is of course something that I have the impression, still have to learn, because once upon a time, we could have a devaluation and we could have national interest rate policies if something went wrong with our economy. We don't have that possibility anymore. And it has been a slow process for everybody to realize that that is a totally new reality. And that's why I think that building the Eurozone further, improving on Eurozone governance on the one hand, and having sufficient and clever structural reforms are two sides of the same coin.
Okay. Try to have some ladies, if possible. I know. Okay. Okay. Shall we? Yeah, we take a last round. But if the minister wants to go, he should feel. Yes. Okay. Thank you. Okay. Last round of question. If we can. Okay. Old man, just man. Okay. Yes, one there. Bruegel, great. and then I'll, okay.
Okay, thanks for the gender bias, that really helps. So on this link between growth and stability here, so does it work enough to have then a growth budget at the EU level and not for the Eurozone, or would that then also mean a call for a Eurozone budget dedicated also for growth within the Eurozone here, or can it suffice to just have growth in the EU budget?
Okay.
Francesco Vadia from Bruegel. I would like to build on a point that Agnès made. One way to look at monetary union is that between the fall of Bretton Woods and the creation of the ECB, we tried hard to make monetary union with rules. And we failed for 30 years, and we went for the institutional approach that succeeded. Now, you could say that now for 20 years we have been trying to make fiscal policy with rules, and we are failing. Do we have to wait another 10 years before we understand that we have to do it with policy and not with rules?
At the very back.
Thank you. I'm Passamonti from Intesa Sanpaolo. I would like to ask a question to Mr. Wolff, who mentioned the case of some crises, bank crises that have been managed in the recent months. Why do you consider that the resolution of Banco Popular is more successful than the liquidation of the two Venetian banks? In both cases, you know, bail-in has been applied. In the case of Banco Popular, is bail-in until the subordinated debts, while in the case of the two Venetian banks, burden sharing, which is exactly the same thing than bail-in, but it is you know, it is in the communication of the Commission with state aids, has been applied. Thanks.
Okay. Yes. One more? Okay, but then... Okay. Let's take this to...
Hi, Reza from the Commission. You highlighted the importance of the banking union, and you also mentioned some of the legacy issues. So how would you deal, for example, with the 1 trillion legacy NPL debt overhang, or deal with banks' home buys, which probably would make some of the Eurozone governance issues more effective and quicker? Thank you.
Sorry.
Suman Berry from Bruegel. This is rather specialized for Reza, given where he's come from. I must say the discussion here about the possibility of a European Monetary Fund came as a slight surprise, because I do know that for a long time there was the sense that the jurisdiction of the IMF should be global. So I was just wondering, in a sense, has that cat got out the door? Should we get used to the idea that financial stability is now going to be regional rather than a global public good?
Easy question for you.
Should have stopped earlier. I'll come to that. Let me just a few words on some of the other questions. EU versus Eurozone. I think I agree with Guntram that EU is easier, but Eurozone makes more sense. Because if you do have monetary policy to use during the crisis, then the urgency is not there. You do not have that. You have a constraint in the Eurozone. So it makes more sense in the Eurozone, but practically it's easier on the EU. On the question of NPLs and its resolution, I think I can see two completely different types of solutions to this. I have been impressed by the recent efforts to take some NPLs and put them into the capital markets through securitization. So there is, given the recovery in Europe, there is interest in global capital, provided the price and the structure is right, to invest in NPLs. The issue then is willingness and speed of the bank's disposal. So that's one solution, but I spoke to that earlier. There is also another solution, which is more difficult, and that would be instead of having individual AMCs, to have an AMC across Eurozone and basically take the NPLs out and have a governance structure which goes across Eurozone, so you do not have domestic interest interfering with resolution. So I think I can see both solutions. We are somewhere in the between right now. We have domestic AMCs and some securitization and disposal, but the speed is very, very low. Finally, on this issue, I think of European versus international, I mean, obviously, I don't work for the IMF anymore, but it is a global trend where regional funds have been set up to support regional countries, usually with cooperation with the IMF. So there is an Asian version, there is now the European version, there are other versions across the world. I think the issue, I think, is can you replicate the expertise, independence, and the global reach of the IMF? Probably it cannot be done at the regional level, so the role of the IMF will continue to be there, even if it is, say, on a technical assistance or surveillance level. But regional groupings can also provide large financing, which is not, so the ESM financing is almost half of the balance sheet of the IMF by itself. So IMF by itself would have not been able to, at the beginning of the crisis, provide the volume of financing that is needed given the large capital markets in Europe.
So on growth, the growth budget in principle should be at EU level. There are two justifications of doing something at euro area level. The first one is that spillovers are much larger within the euro area. If there is no longer any growth in Italy for years, it's a systemic problem for the euro area. If it is in a country out of the euro area, it's not systemic for the euro area. And the second justification may be of political economy. In a sense, the countries of the euro area have self-selected as countries that want more integration than the other ones. Maybe this is another possibility. But this question also of spillovers justifies also the European Monetary Fund as compared with the IMF. Initially, I thought that when you do some insurance, macroeconomic insurance, the bigger the better. So IMF is superior to any regional fund because you can diversify the macroeconomic shocks. But then the IMF, the members of the IMF used to be countries with their own currencies. Now we have a group of countries with a single currency with a huge systemic risk within them, so we can justify an additional scheme as compared with the normal scheme that is accessible for standalone countries. Finally, on the slow learning process of the monetary union, in a sense it's right. In another sense, I read some publications by Bruegel on US monetary union, and what I remember from these readings is that it has been very long also in the US. The monetary union, it took several tries before the dollar was introduced, and several decades also. So, in a sense, the Europeans are not so slow as compared with historical experience.
Well, perhaps on the last point, I think I would agree with Francesco that perhaps the move away from the rules base towards something institutional is the right one, and that's basically why we had this discussion. And I don't believe that a better system of rules will work in any way better than the current one. I think we've tried enough reforms of the SGP to know what it can deliver and what it cannot deliver, right? So perhaps on the growth fund, I mean, I'm perhaps not quite as black and white as you are, Agnès. I mean, I think an EU country that is very close to the euro area is also systemic. Of course, if we don't have any growth, let's say in Poland or a country like that, of course it would have major spillovers. So certainly there is a logic for having growth funds, structural funds, not just at the Eurozone level, but also at the EU level. Then there was the question on Banco Popular. I'm not sure I understood everything correctly, but I mean, I think the Banco Popular case was successful in the sense that no public money was used. And that, I think, is the spirit of the new banking union, unless we really have a big systemic crisis. Now, in Italy, there was some public money used. Now, there are good reasons why this was used, and that I explained that. The transition of the balance sheet structure was not finished, and arguably, probably the transition period was too short, so I can understand that, but certainly there was public money used, and in that sense, it was not in line with the BRD, spirit of the BRD.
Okay, I think we can end this discussion here, so please join me in thanking all our speakers, and obviously in thanking Bruegel for organizing this stimulating event. Thank you.